The broadcast is now starting. All attendees are in listen-only mode.
Okay, good afternoon, everyone. Today is February 13th, and it's roughly, it's about 10 to 1 Chicago. So I opened up the room a little early today to get us rolling. I want to do a few things that I have to do and say before I present is to go over some of the disclaimers. So instead of just throwing them up there and asking you to take a few minutes to look at them, what I like to do is go over it in a little bit of detail so you understand what's going on when it involves trading commodity or futures, okay? Because we are dealing with a leverage market, and you know, the goal of this webinar is more of a eyes wide open approach. So it does start with the risks. So it does start with the disclaimers. And it's not a fancy way to start, but it's important because I've been doing this for almost 25 years, and I've seen the good, the bad, and the ugly when it comes to trading. So it's a good starting point. So it has to be said. What we're going to do this afternoon, number one, we'll go over the disclaimers. Number two, we're going to go over the trade setup. We're going to break it down in slow motion. It's the same setup that Michael is doing inside the training room. The platform that I'm featuring is DtPro. That's the platform that I support, and the indicators are built inside the platform. Okay, so with a few right clicks, you can actually have the indicators flowing, and of course my phone's ringing. So 1 second. All right, so I'm back. Again, just advance warning. This is live, so my phones will ring, and I'll have to put you on hold and hit the mute button so I can field some phone calls. But the goal is to go over the trade setup in slow motion, okay? And then what we'll do is we'll apply what we've learned, and we'll go inside a live market setting, and we'll identify the setup, okay? We'll go inside the DOM here. If you're brand new, move this out of the way. If you are brand new, let me get my little marker out here, highlighter. This is our DOM. It's called short for depth of market. Okay. This is where we do our buying, and this is where we do our selling. Okay. So what we're going to end up doing is looking for that same trade setup. Okay, this one right here. We're going to go inside a live market. We're going to be on a 4-tick range chart, and once we identify it, we'll hop inside the DOM here. Okay, this guy over here, and we'll show you how to enter a trade, where to put the stop, how to trail the stop, and when to exit. Okay, I'm going to walk you through it from start to finish and in slow motion. Okay, so the goal is for you guys that are brand new, this is a good training syllabus or something to lean on going into day one of the training room. Okay, so if you're on the trial and this is your first day, maybe your second day, this is a great place to start. Okay, because you're going to see the setup, you're going to hear the buzzwords, you're going to see me in action in a live setting, and it's all going to be done in slow motion. So at the end of the trial, when you do get an offering from CFRN, again, your eyes are wide open, and you can make that decision on whether or not you want to push the PayPal button or not. Okay. Throughout the presentation, I'm going to go over some of the traps that people fall into. Okay, I've been in there since day one. That's about 8, 9, 10 years, and throughout the years, I've seen some of the same things happening over and over again if someone's struggling. Okay, so I'll point those out. Okay, so if you are a CFRN member and you're hanging out, great. This is giving you more screen time. You're getting to learn the personalities of the markets that we're trading. Okay, you're going to hear the setup from my point of view. Okay, and so hopefully you can absorb what's going on. Okay, and then turn that into a positive experience, or maybe find out what you're doing wrong, or what have you. Okay, the idea is to get you back on the path if you're struggling, or give you some confidence if you still haven't pushed the button. Okay, that's the bottom line. Okay, throughout the presentation you can ask questions. Okay, I have the box right in front of me, and again, this is live, so if my phone starts buzzing, I'm going to hit the mute button and put you on hold. Okay, so that's the game plan. So as I said in the beginning, we are going to do this, let me do that, and let me highlight this. Okay, I'm going to start with the disclaimers. Okay, and again, I've been around for a long period of time, so I don't like to glance over this. And this is basically catered for those guys that are brand new into our space. Okay, the guys that usually are knocking on the CFRN door, they're either brand new, or they've been to this guy and this guru and this training room, and they've read this and that, and they've learned a little bit over the course of the years. So they've been through the battle, they've been through the war, so they're kind of numb to this disclaimer. Okay, this is basically a disclaimer that's for basically the brand new guys that are just learning what this is all about. Okay, there's involved in trading futures. We're talking about a leverage market. Okay, that means if you're not watching over your trading account, if you're not using stop losses, if you don't have a trading plan, if you're not engaged in the marketplace or the news items for the day, this disclaimer is going to hit you right smack dab in the face. And what it says is you can lose everything in your trading account and some if you're not practicing some of those simple things. Okay. Now, what does this mean? Well, here's the positive spin on it. Okay. Go like this. Number one, we have a trading plan, right? We have a set of rules. Okay. We're basically going to go over 4 this afternoon, right? So that kind of checks that box, right? As I'm going to highlight, every trade has an 8-tick stop attached to it. Kind of checks that box. We're going to be on a 4-tick range chart, so you have to be actively involved, engaged in the marketplace. You have to be in front of the screens, all right? So kind of checks that box. The CFRN method, they don't trade during news items, okay? So you have to be in tune with what's going on in the world and when the news comes out. And it kind of checks that box too. As I said earlier, we buy and sell inside the DOM here, right? So you have to be in front of a trading platform, and you really have to be engaged in your trading account. Also checks that box, okay? So all the things I scared you with earlier, okay? CFRN is doing all the right things to avoid what I am telling you right now, which is the disclaimer. You can lose everything and some in your trading account, okay? Now, you can do all that stuff. Okay, you can, like I said, you can be using the stop losses. You can have a trading plan. You can be right in front of the screens. You're pushing your own buttons. In the end, yes, if you do all that stuff and some goofy news item comes out, your stop losses can be skipped over. You can still be in the marketplace and you have unlimited risk. Okay, that you should know. Okay, and I have seen that. The good thing is you will be in front of a platform, right? So if the scary thing does happen, you'll be right here, okay? And your course of action is going to be hit this hotkey right here, exit at market and cancel, okay? And then you can call me up and say, what the heck just happened, all right? But at least you're flat, you're out of your positions, and you don't have any orders working, so your risk has been controlled, all right? So if that black swan event happens, you know, you should know that that's a possibility, but there are ways to avoid it. Okay, so again, not a classy way to start a webinar, but again, this is an eyes wide open approach, and we like to do that. In addition to that, the funds that you put in a trading account, it should be risk capital. It should be funds that you can afford to lose. I know nobody likes to lose. I don't. But in the event something silly does happen, you can still pay your bills. All right, that's what that means. And past performance is not necessarily indicative of future results. What does that mean? Well, what we're teaching you now may not work in the future, right? Well, the flip side of that, just so you know, is we are going to go over the snapshot, right? This rule set, this is just a picture back in 2012. Okay, that was 8 years ago. Nothing's changed. Nothing's been form fitted. Nothing's been tweaked. Okay, same setup's been around from day one. Some other things have been developed, of course, the years, but this one has been around from day one. That's why I'm going over this one, because that's the one that's in the training room. That's the one Michael's using, and this is kind of the backbone that leads you into some of the other ones that you're going to learn. Okay, so it covers that box. Okay, so let's minimize that again. Let me erase that highlighter and go to template number 2. Okay, which is this. Basically, this highlights my relationship with CFRN. I am Bert. I'm with Daniel's Trading. Okay. No, I don't work for CFRN. And Michael and Dwayne at CFRN do not work for Daniel's Trading. Okay. There is a brick wall in front of us. There has to be. Okay. Basically, we have a third-party relationship. That's how this works. Okay. It's their indicators. It's their software. It's their trading tools. They're the educator. Okay. Their indicator set is built inside our platform. The platform I'm highlighting is DtPro. Okay, here it is. And with a few right clicks, you can have the CFRN indicators running right on the platform. So it's pretty simple. Okay, so my involvement is I support the platform, the indicators. If you're having trouble with that kind of stuff, hey, you know what? You would call me directly. Okay. The good thing about that is you get to talk to a live body. The person that's picking up is going to be me. Okay, so that's helpful because I know the setups, I know the platform, I know the indicator set. So it's nice to to be able to contact somebody and get taken care of. Okay, you're not exchanging emails back and forth. Sometimes that gets confusing. All right. Down the road, if you decide, hey, I'm going to be a CFRN member, and you're going to use DtPro as your trading platform, then down the road, you'll have to open up a trading account. I handle that side too, the execution and the broker side of it. Okay, that's my role. Also, I'm in the room every single day, and I do this every Thursday afternoon. Okay, common interest. The reason why I do it is to educate people, them comfortable with the platform and the setup, and answer any questions in a larger setting. Okay. If you're doing well, I do well, so there's a common interest, right? So anything that I can do to tip the scales or get you pointing in the right direction, then it's worth it for me. Okay. The flip side of that, again, if you decide to go down the CFRN path, anything that's associated with CFRN on their website, you reach out to them directly. More importantly, if you decide you're going to hit the PayPal button, that's between you and them, not me. Anything on their website, the videos, Thursday night workshops, Logic 247, by the way, is this, Logic 247, okay? Anything associated with them, you would reach directly out to them. Mike is in the room in the morning. He's the moderator from 8:30 to 10:30. Dwayne hops in once in a while, but he's really doing, he's kind of steering the Logic 247 product, and also he's doing radio in the afternoon. Okay, so that's his role. And then you have Valerie all mixed in there, answering phone calls, taking in emails, helping people out that way too. So we all have our, that's kind of the cast of characters. And like I said, I've been around since day one. And initially, it started off as just the radio. Okay, this wasn't going on at all. So somehow Dwayne and I got together, and he said, "Look, come on the radio program. You've been around for a while. You can add some value to the program. We can talk markets, shop. You can answer questions that people have." And the one common thing that I saw in the chat box every week was, or every day for the most part, was teach us how to do it, teach us how to do it, teach us how to do it. And I think together, him and Michael got together, and they're trade station developers, and they decided, you know what, we're gonna open up the school, and I happen to have a platform that reads easy language, so it just happened to be been at the right place at the right time, I guess. So that is the story. Now hold on, let me. I was having trouble getting indicators on my demo, and there they are. Okay, so that's the scoop. That's how it all started. That's where it was created. Okay, so I've been around from day one, so I know what the heck's going on. Okay, so that takes care of that part. So it's a little bit after 1 o'clock. Perfect timing. Guys are piling in the room. So then we're going to go over the setup. Okay, and we're going to break it down a little bit. This is the syllabus for the new guys. Okay, this is a trade setup, the traditional slingshot setup that's going on inside the training room. Okay, like I said, it's been around from day one. That's why I highlight it. Okay, the first order of business is the time frame, which is the 4-tick range. So if you have DtPro, the question is, how do I get there, right? And so here's what we do. Let me get out of live mode and stay in demo mode so I don't screw anything up. Okay. So how do we get to the 4-tick range? Generally speaking, most people are on a daily, on an hourly. If you're following Logic 247, you're probably on a 30-minute, right? Or you're on a 5-minute. Okay, you're normally on a time-based chart. In the training room, we're using a 4-tick range chart. So all you have to do is on the top left-hand corner of the chart box here, next to time frame, you'll have a little drop-down box. Left-click on that, go down to custom, and select a range bar. Make that one look like a 4. Okay, then hit OK. That'll get you on the 4-tick range. Okay, the tip really is this little guy right here. So parentheses and R that let you know that the height of each candle, okay, no matter how big or small they look, is always 4 ticks in height. And the reason that is, and why Michael uses it, one big thing that you'll hear is during the training room, you're going to hear Michael call out the highs and the lows of the current bar. Okay, so as this candle is forming, okay, it's always going to be 4 ticks in height, right? So you're going to start hearing him call out the lows or the highs, okay? If all the rules are in play, okay, we're going to go over the rules. If all these rules are in play, and he's starting to call out the highs and lows, he's getting ready to place an order in advance, okay? So what he ends up doing, if the current market price is here, he might place a buy stop above the market or a sell stop below the market. All right, depending on the indication. If we got a bullish setup, he's going to right click in the green above the current market price and place a stop. Okay, he's going to enter in on a stop. If he gets a bearish setup, he's going to create a sell stop. Okay, so if the market takes off, okay, he's going to be actively involved in that market. Or if it breaks down, he'll be on the short side, taking advantage of it. The idea is he can be proactive in placing the order because he knows the height of each candle. All right. So in the beginning, there was a situation where, the market would dramatically drop or dramatically rally, right? We just get this impulse move, and then Mike comes over, pulls his diamond into play, and everyone goes, wait a minute, time out. How did you get into that? There's no way you were fast enough. Well, the way he was doing it, he was placing a buy stop or sell stop, and when the market took off, he was taking off with it. So that's why we're using the 4-tick range. Okay. The other way to place an order is, and the simplest way, and I'm going to go over it this afternoon really, is once the rule applies, you just simply go in the green and left click, place a limit order. Or if we get a short, if we get an opportunity to get short, we'll just go inside the red and left click and get short. If we get a setup, okay, and the market's kind of back and forth, and we get that situation where I can be proactive and place the order, I'm going to do it for you, okay? And I'll show you a little a little tweak on how to do that, okay? So on a 4-tick range chart, the one trap that people often fall into is they go down to the drop-down box, they go down to custom, but they select tick bar, okay? And they make that 2 and they make that a 4. This is the crude chart on a 4-tick bar. It just, if you're staring at anything that looks like this, it's wrong, okay? Something's wrong. You fell into the first sand trap. So if you hit 4-tick range, that's that same crude chart, but on a range chart, okay? All right. So there we are. The time frame is set. Okay, we're on a 4-tick range. I might, just to throw you a curveball, okay, if you're crazy about trading the mini Russell or the NASDAQ, one way to slow the market down is go to an 8-tick range chart. The same setup applies, the same rules apply. The only things that change are the risk factors. Okay, instead of being 8 ticks, we're going to use 16 ticks because you just doubled up the time frame, okay, or you just doubled up the heights of the candles, right? So now your risk is 2 candles. Okay, I'll get into that later. If there's nothing going on and things are slow, okay, we'll jump into that kind of action. Okay, but we'll stay on the path and stay on the 4-tick range. Okay. All that said, we just finished on the time frame. So now we're going to work on the top portion of the chart. Okay, so here we go. Some buzzwords. The red and blue line is referred to as the MA1. Okay, nothing fancy about it. The green line is referred to as the BBC. That is short for bullish bearish cross. Okay, so together, okay, the MA1 and the BBC, they make up step number 1, which is this. If the MA1 is red, I'm crossing the BBC, that's a shorting opportunity. Okay, we're looking for potential places to get short. If the MA1 is blue and crossing the BBC, that's called a bullish cross. Okay, that means we're looking for bullish opportunities. Okay, so the one that's highlighted here is referred to as a bearish cross. Why? Because the MA1 is red and it's crossing the BBC. So now we're on alert to be looking for shorting opportunities. Okay, I want to make a point. Note, I didn't say go short, go long, go short. Okay, so we're looking for opportunities to get long or short. Okay, that leads us into step number 2, which is this. After the cross, the normal thing for the market to do is to gravitate toward that green line of the BBC. That's what we're looking for. Okay, so not only are we looking for that market to gravitate toward the BBC, we're actually looking for it to touch it and then close in the direction of the trend. So if we know we have a bearish cross and the MA1 is red, then we should be looking for a red candle. Okay. If we get a bullish cross, then we should be looking for a green candle or a blue candle, depending on how the color of your chart is. Okay. The idea in the end, when everything is the same color, it stacks all the probabilities in your favor. Okay. In other words, there's no other filtering to do. There's no other decision-making things to talk about. It's just get inside the DOM and take action. Okay. So step number 2, we're looking for the market to gravitate toward the green line, touch it, and then close in the direction of the trend. Okay. One big question I always get, and I don't see it in the box today, is, hey, dude, why don't you just place an order, go short right there? And the reason is sometimes the market just does this, breaks the BBC and just takes off. Okay. What we're doing is we're sacrificing price for action with that candle. All right, so hold on here. All right, sorry about that, guys. So like I said, you're sacrificing price for action. Okay. So that's why we don't do that. That's one little step or one little variable that might say, hey, you know what? The market might just might be doing the normal thing, which is gravitate toward the BBC and then bang off and start heading down. That's why we don't place an order there. Okay, that saves us a potential stop out. Okay, so we look for that down close. All right, here's a curveball to that. Step number 2. Sometimes the market is not going to get to the BBC. Okay, we're going to see that this afternoon. Okay, so what you're going to do is you're going to get in the habit of drawing the trend lines. When you're in the training room, you're going to see Michael drawing trend lines all the time. Boom, ba boom, ba boom, ba boom. This morning, you probably saw Valerie drawing trend lines. Boom, ba boom, ba boom, ba boom. Okay, that's one habit you need to get into. As soon as you get the cross, and especially CFRN members that are listening to me now, as soon as you get the bullish or bearish cross, the next thing that you should be doing, okay, is hitting your trend line button right here. Activate it, okay? Because as we start gravitating toward the BBC, like we did here, okay, you have to start drawing, okay? It takes 2 candles to draw a trend line, okay? 2, and just start drawing. Okay, that's an art in itself. That takes practice. Okay, just remember it takes two candles. Okay, to connect the dots. All right. So again, you don't know if it'll get to the BBC. Here's one good example right in front of us. Okay, here it is. It doesn't get there, and guess what? It takes off. Okay, or it advances. Okay, so you want to put yourself in a position where if something does happen, your next step is to jump inside the dome and push a button, not fumble around with the trend line after the fact and You just need to create a habit. Boom, 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 boom. Okay, that's your game plan. Okay, that takes organization, practice, patience. Okay, all that stuff. Does it come overnight? No. All right. Step number 2, we get the down close. Okay, so we had the cross and we had the bearish close. So now our eyes are going to gravitate. No, good question. Brett's question is, do the candles have to be the same color? No, they don't. But if we're going to be flagging, okay, if we're going to start gravitating toward that green line, Brett, then chances are you're going to get a green candle, or a red candle, red. You'll get them back to back to back. Okay, I like that kind of action where we get that same color action, because that knows we're trying to get the market's trying to do the normal thing, and it's got so much bearish and bullish momentum, it can't even get there. All right, so your answer is nope, it doesn't have to be the same color. I prefer it. Okay, so as that's happening, okay, you're going to draw your trend line like Brett's thinking. All right, and then our eyes are going to gravitate toward the slingshot portion of the indicator set. Okay, that's the oscillator portion. Okay, now the trade setup, it's down here. Okay, it starts and ends here. Okay, and I'm going to show you why it all exists down here in the slingshot. Okay, but to understand that, I think you need to know the buzzwords here. So brand new guys, this is called the cycle. Okay, nothing fancy about it. And this is referred to as the green line. Okay, no biggies, right? But here's the scoop. What the cycle is telling us, it's red, right? As I said earlier, we want everything to be the same color. That stacks all the probabilities in our corner, right? We want to see that. That's good for the home team. So when we have a bearish situation, okay, and that cycle is red, and also the slope is at a 45-degree angle, that is something to get excited about, because it's saying the momentum is bearish. Okay, the wind is to our back. We should be comfortable with that. Okay, the green line pulling away from the cycle together with this price action, you're going to notice they run side by side a lot of times. Okay, these two pulling away. Okay, the green line is being pulled away like a slingshot, right? What that is implying is that this little pop-up in this ongoing downtrend, right, is just an air pocket. Okay, the market has done the normal thing, Brett. It got to the BBC and we had that down close. So that's another variable that says, hey, maybe we are heading down. Okay, so that's it. This is just a little pull away. This space in between here, okay, that's highlighted by the yellow arrow, that is the divergence or the separation Michael's looking for all morning. Okay, divergence or separation. Okay, because here's what we expect to happen in the end. Okay, the green line is going to pull away from the cycle. So is price, right? And then ultimately that green line is going to work its way into the cycle. And guess what? Price is going to follow along with that. When the green line touches the cycle, this is the point where we cut the trade loose. Get out of it. Okay? Why? And this is why the trade exists down in the slingshot. Because the green line will pull away, get into the cycle, pull away, get into the cycle, pull away, get into the cycle, until, hey, our momentum is now bullish. Okay? And so we're looking for that green line to pull away underneath it and create that separation. All right? So what you end up doing is selling that top, buying that dip, buying that dip. And along the way, in a perfect world, take the profit there, take the profit there, take the profit there, and take the profit there. In a perfect world. And anyone that's been around trading, no, it's not perfect. But this is why it all exists here. Okay. The number one thing Okay, this all takes place, okay, for, let me put it to this way, okay, nothing takes place unless the market is trending, okay. So if we are looking for a bearish opportunity, we better be making lower lows. If we're looking to buy dips, we better be making higher highs. So if there's something that you want to have on the top of a piece of paper, talking about CFRN and trend, markets, you should have this little script that says market must be trending, period. It starts there. If it doesn't, you're not pushing any buttons, okay? Now, that's an art in itself. It's fun just to throw that name out there. Hey, the market needs to be making higher highs or lower lows. The market's trending. That's not that easy. Okay, in a textbook, it's common sense. It kind of, you just accept it for what it is. But in the heat of the battle, on a 4-tick range chart, it's a little bit tricky. All right. So if you're struggling with that, that's one of the biggest traps that people fall into. It's one of the hardest things. All right. So I'll give you a solution. Oops. What to do there. All right. So that's the setup. Okay. Every trade has an 8-tick stop attached to it, no matter what market we're trading. So if you're brand new to the game, if you're trading crude or gold, you're risking $80. If you're dead wrong. If it's an ES, it's closer to $100. If it's the mini Dow or the Euro, it's $40. Okay, if you're dead wrong. Okay. I'll show you the risk management rules when we get involved. Okay. But that's the outline. That's the setup. Okay. So if this is day one, okay, you're not learning to pick the top and you're not learning to pick the bottom with CFRN. You're not learning to trade from point A to point Z. You're looking to take a piece out of the middle. You're going to have an 8-tick stop behind every trade, and you're going to use aggressive risk management. Okay? So you're signing up to scalp. You're going to be in and out. You're not holding positions overnight. You're in and out. Okay? With aggressive risk management, that's generally associated with a lot of trades. Okay? You're going to have a lot of break-even trades. You're going to have -8s, break-evens, +1s. It's a possibility you can do a lot of trades. So that's what you're signing up for. You're going to be signing up to sit in front of your screen for a little bit. Okay? So if that's something you want to do, that's what you're signing up for. Okay? So that's a scoop. All right. Enough of that business. Let's get our hands dirty and let's get inside a live market. Okay. Well, let's start with this one. This is the S&P 500. Okay. So as I said, the first order of business and what should be on the top of everyone's piece of paper is, are we trending? Are we making higher highs or lower lows? Okay. So right now, here's what I see. All right. I see dynamic resistance and support printing. They're side by side. Okay. So for the moment, I see the S&P 500 trading sideways, back and forth here. Okay. So I'm not too excited about doing anything in the ES. Okay. This was trending action. Okay. We did have a new pivot high. Okay. That would have been okay if we were in the heat of battle here. But for the moment, in real time, we're side by side. If you're not sure, okay, as I just did, dynamic support and resistance dots will help you out. If they're side by side like this, okay, that's an indication we're trading sideways. Okay, so remember that. All right. The other thing I want you to get in the habit of doing, okay, is I want you to hit this zoom out button, this red magnifying glass. This is going to help you determine whether markets are trending or not. Okay, 1, 2, 3. Okay, that's all you have to do. The reason why you want to do that is you want to see what's going on left. Okay, notice there's like pretty big air pocket here. Okay, that tells me we're trending when we got past this obstacle here, right? When we got past that obstacle, there was nothing really to look at over here to the left. Okay, we're trending. Okay, so I want you to get in the habit of hitting that red magnifying glass. That's going to be your best friend. No, you don't have to go to a 5-minute. You don't have to go to a 30-minute. You're on a 4-tick range. You're trading on a 4-tick range. So find the trending markets on a 4-tick range. Okay. You do that by hitting the zoom out button. Okay. Metals. Let's go to the gold. Perfect example of this, right? This one kind of hits you right in the face, but my God, look at this. Side by side. Okay. That sideways action, this is where you get beat up. Okay. Here's what happens a lot of times, and this is not a knock on Michael. Okay. But here's the scoop. You're in the room, and there's 4 charts blowing up pretty good. Okay, they're going to look like this. Okay. If you have this screen under a fine microscope and you're zoomed in pretty good, what might look like it's trending, I hope that's right. All right. If you blow it up and hit the zoom out button, you might find out we've expanded the sideways action. Okay. So in the moment you're like, oh, we got that pullback to the BBC, and there's the up close. All right. And you get in there and you jump in there, right? Yeah, I got this. And all of a sudden the market backfires and it starts trading sideways and it gets you stopped out. You're like, what the heck just happened? Chances are, okay, you had that sucker zoomed in so tight, you did all the right things. Okay. Like right here. Here was the bullish cross. Here was the pullback to the BBC. Okay. Here's the bullish cross, step 1. Here's the pullback to the BBC. That is an up close. And here's an entry. You got separation, and this is bullish. Okay. And all of a sudden, market does one of these. You're like, oh, great. Right? Frustrated, watching paint dry. It forces you to overanalyze the trade and make crazy decisions. The reason this is happening is because when you zoom out, you got caught in the sideways market and you didn't even know it. So you need to get in the habit of hitting the zoom out button, period. That'll be the solution. Okay. That's it. All right. So the gold, we decided it's not going anywhere, so we're not going to stare at it. We're going to go to crude oil. Okay. Are we trending? That's the first question you ask yourself. Zoom out, zoom out, zoom out. Okay. I see a bullish cross here. So that I'm thinking I need to get long. Okay. I also see I'm looking for the normal thing. Okay. Which is the market to pull back to the BBC. Here's 2 candles. It started off like this. And this is the answer to Brett's question. No, they don't have to be the same color. Okay. However, the trend line needs to be adjusted this way. Okay. As we gravitate toward the BBC, we do have this bullish separation. All right. But when I look and zoom out, I look at a market that's potentially at the top of the trading range. All right. So hold on, guys. No, we'll call that. All right. And right here, I have dynamic resistance. Right here, I have dynamic resistance. So for me, okay, if you look at this, you might say, all right, maybe we are trending. Okay. No, we're not. And we have dynamic resistance here. So even though the market has reacted up and we missed an opportunity, okay, we're not trending in my opinion. So I would not touch it. Okay. So let's sit on your hands. Okay. All right. Let's look at the natural gas. Okay. I look at the natural gas because on Thursdays we have the AGA report. That's the supply number for natural gas, and I know it kicks it around. The other thing is I'm familiar with the personality of the market, so I'm comfortable with watching it and trading it. In the end, what you're gonna do is you're gonna gravitate toward those markets that fit your personality. So the big question I always get in the beginning is, hey, how many markets should I trade? How many markets should I look at? Well, you're absorbing as much as you can, right? So you want to look at as many examples as you can, okay? In the end, you might start off, in the beginning, you might start with 4, 5, 6. Maybe that's too much. It just depends on each individual. But in the end, you'll end up gravitating toward those markets that fit your personality, period. Markets that you're comfortable with. Just a quick story. Mike used to trade the crazy mini Russell, okay, for years. All right, it's like he's doing well in it, right? That thing moves. It's like a race car, okay? It doesn't. Let me tell Clark. I'll call him back. One second. Hey, Clark, can I call you back? I'm in the middle of a webinar. Here. Yeah. Oh, cool. Thank you. Bye. All right. So I'm watching Michael trade the mini Russell. I mean, he's doing well, right? So I'm like, I've been doing this for almost, at that time, 20 years, and I'm like, if he can do it, I can do it. Nope. As soon as I pushed the button, that thing was hopping, jerking around. I'm like, what's this thing doing? And I'm moving the stop up, and it was making me a nervous wreck because I wasn't used to it. I wasn't staring at it enough. I wasn't used to the personality of the market. Couldn't make money. Okay, just too herky jerky for me, and I wasn't comfortable with it. So take that experience that I went through and remember that, because that's something that'll happen to you. Okay, so you might trade, you might be looking at 4 or 5. In the end, you might scrap all that, and it might be just one market you look at. And it's because you get it. It fits. It's comfortable. All right. Let's go back to looking at markets. ES still sideways as we suggested. More green dots printing. Okay, so we don't want to screw around with that just yet. Let's go down the currency trail. Okay, so we're going to look at the euro. All right. Again, an easy and obvious one. Are we trending sideways, sideways, sideways? No, we're not. Okay, we're just kind of stuck in the moment here. Okay, we did have a bearish cross here. Okay, we did have that pullback to the BBC. This dragonfly doji here, this doji here, that is a bearish candle. Okay, when it's just a wick. Okay, that's a bearish candle. This is a bullish candle. Okay, those two dojis. Okay, if you ever see that at the BBC, that's an indication that we have a bearish and bullish close. Okay, so that is a bearish close there. Okay, and we do have separation down below, right? Because when that happens, our eyes gravitate toward the slingshot. And look at, we're at a 45. It's red, and we have a 45-degree angle, so we feel comfortable with that. And the green line is pulling away. So I'm not surprised we did see a reaction here. Okay, but as it turns out, that would have ended up being a break even. This was support over here, and now we're kind of in chop fest. So just some descriptive commentary. Sideways action here. Again, the support and resistance dots kind of pop up right in front of you. Okay, very typical of a sideways market when those are back and forth. That's a good indication. Sideways stuff. Swiss franc. Sorry, here's another market that's sideways. We have a double bottom here. Okay. The first possible action was here, bearish cross, Market gravitates toward the BBC. There's that down close. Again, red cycle at a 45-degree angle. Okay. We talk a lot about color in the room. I want you to think about the slope also. Okay. Slope. If it's at a 45-degree angle, you want to get excited about that. Okay. So remember that. Conversely, if it's in your face, now let me see if I can find an example of it. That's a reason why we don't take that trade. A small example of that is here. I'm staring at the Australian dollar. Okay. Bullish cross. We were making higher highs. And here's the first up close. The pullback to the BBC with the up close. Okay. And then all of a sudden, the cycle turns red on us, right? Okay. Here's what happens. The reason why we draw trend lines, as I outlined earlier, is because we never know if it'll get to the BBC, right? We have to be prepared for that. The other reason why we draw trend lines is because if the cycle turns a different color, okay, that means in this example, if we're looking for a bullish setup, we want a blue cycle and we want it at a 45-degree angle like this, right? That's good for the home team. But if this ever turns red on us or a different color, this trend line is also required. It needs to be drawn, and we also need a close above the trend line to take action, to take the next step. Okay, that's two reasons why we draw trend lines. The curveball is if, okay, it starts doing this, it's a different color, and has a 45-degree angle, okay, that slope again we just talked about, and it's against you at a 45-degree angle, no trade. Okay, here's a good example of it right here. Here's the pullback to the BBC with the up close. This is red. And look how that 45-degree angle has produced a market that went south. Okay, so hit the pause button a little bit. Ideally, we want everything to be the same color. Okay, we don't have a lot of trades that way, but ideally, everything the same color. Okay, if the market does get to the BBC and we get the close that we're looking for, if the cycle turns a different color, one, what should register in your mind is that's watering down the probability. Two, the trend line needs to be drawn. Three, we better have a close above the trend line before we can take the next step. And four, which is the most important part, is if it's the wrong color and going against us at a 45-degree angle, no trade. Okay, there's a lot to absorb there. Okay, that's where this one takes practice. In the training room, a lot of times Michael has taken the setup when the color of the cycle is a different color. Okay, as long as it's flat, that's fair game. At a 45-degree angle against you, no. Okay, how do I know if it's a 45-degree angle? Well, I could do one of these and tell you that's a 45-degree angle. My answer would be this. It should be easy and obvious. So it should be the same color. Or if you're going to go on that other side of the fence and trade when it's a different color, okay, if you have to ask yourself, is that a 45-degree angle? Well, that looks like it's a 20, that's 15 or 25, 30. If you have to ask yourself that question, it's not easy and obvious, is it? So don't push any buttons, okay? So just don't do it. It's your solution. All right. So that's another trap that people fall into. Okay. Here's the yen, a lot of sideways action. The Mexican peso trading sideways here, just started breaking out. So potentially we got the peso breaking out if it keeps going. So let me try to find something that we can sink our teeth in with the DOM. Let me find something here. Maybe I'll find it in the crude. All right, so we finally broke this area, right? Okay, so we broke dynamic resistance. So let's see if the crude oil pulls back for us, okay? That means we want this market to pull back to the BBC, okay? That's a possibility. All right, I don't want you guys to do anything just yet. I'm gonna go over what I'm doing right now. Just bear with me. I just want to get filled. All right, what did I just do? All right, I want to go over this because I wanted to get something done inside the DOM. Okay, so let me break this down and I'll tell you what I just did. Are we trending? Are we making lower lows? Yes, we are. Okay, there's nothing over here, right? And we did break dynamic support. We broke this old low. Okay, we started gravitating toward the BBC and I just drew a simple trend line off the two candles. All right, let me tell Ron, I'll call him back. One sec. Hey, Ron, can I call you right back? I'm in the middle of a webinar. Okay, thank you. All right. So I drew the trend line off of two candles because, again, it takes two candles to draw the trend line. Okay. And we had a close below the trend line, correct? All agree on that? So we have this candle closing below the trend line. I have a red cycle and I have good slope to it. So I'm excited about that. And I have that separation or the divergence that we talked about earlier. Okay. So the normal thing for the market to do, all right, is for the green line to ultimately come down and get into the cycle. What's a touch? And doing so, the natural gas should make a new low. Okay, that's normal. All right, so it's set up. So what I did is I went inside the DOM. This is where we do our buying and selling, and I left clicked. Okay, watch when I do that. I put an order to sell it right at this price. Okay. In addition to that, what I did was I hit this little Tinkertoy triangle up here on top. When you put your mouse over, it's called bracket option. And you notice how the DOM opens up, the bottom of the DOM. Well, when the bottom of the DOM opens up and you check off just the buy stop and just the sell stop, okay, you should have two check marks next to it. Okay. If you right click over the word buy stop and go factor in ticks, and right click over the word sell stop, factor in ticks, and make that an 8, whatever number that pops up, okay, that automatically puts a stop loss 8 ticks behind your entry. Okay, so there's no additional left clicks and moving around in the DOM, okay, to create a problem or create an error or get you turned upside down. It's called the bracket option. So watch. When I left click, that's the short, and there's the stop loss 8 ticks away, right behind it. Okay. Now, the rules of engagement. Okay, when do we move our stop down? If it goes plus 4 ticks in our favor, okay, 1, 2, 3, 4. So if it gets to here, or it closes on the other side of the MA1, okay, that's that buzzword here. We get it closed below here, okay, which ironically would also be 4 ticks in our favor. We will move the stop to our entry or break even, okay? Here's the stop loss. It's in the white area here, okay? Here's what you do. To move it down, and this is what Michael is doing. Just put your mouse over the number 1 and left click and hold the mouse down and drag it and release it. Drag it up, release it. That's all you have to do, okay, to move the stop loss, okay? So if she breaks down here, okay, I'll just drag this sucker down to our entry. Where's our entry? Here. It's outlined here. It's outlined in the chart. Okay. There's several places to tell you you are short, and this is where you're short from. Okay. So that's the game plan with the natural gas for now. Okay. That's what we're looking at. All right. So instead of watching paint dry, I will put an alarm in, right 4 ticks. All right. And go from there. Okay. And then we'll go to a different market. So let's go. Okay, here is the crude oil. As we said, zoom out, zoom out. There's nothing really to talk about. There's an air pocket here, right? So that tells me we're trending. We were trading sideways until we broke dynamic resistance, okay? So what you can do, you know, to draw a trend line, okay, off of these 2 candles. Remember, it takes 2 candles to connect the dots, okay? If we close on the other side of the trend line, okay, that is telling us right here that's a possible problem because it's red. So the trend line is required. Okay. In addition to that, and I'll delete this, but a close above the trend line will also be called a momentum trade. Okay. You're going to see those happening in the training room in the morning. Okay. Michael does a lot of momentum trades that kind of look like this. Okay. Where you draw the trend line, it closes above the trend line, but it also is closing above the MA1 at the same time. Okay. The rules of engagement on that one is as soon as it goes to 1 tick in your favor, you move the stop to your entry right away. All right, that's really aggressive. Okay, but that is the rule. So I'm going to skip over it, but I wanted you to see how I draw the trend line and evaluate what's going on, starting with the trend. Okay. Okay, that's fallen asleep. Let's go to the indices. Again, a lot of sideways action here. Okay. I know what you're looking at, some lower lows, gradual lower lows, but we're still hanging around here, okay? And look at the cycle, it's sloppy in here. So sit on your hands, okay? Let's go to the gold, see if anything's firing there. Again, more of the same. Sometimes you'll go through this process, there's nothing there, okay? So let's try the NASDAQ, okay? Let's slow it down. So slowing it down means you're going to change it to an 8-tick range chart. All right. Interesting enough, we're getting a pullback to the BBC, right? We had the bullish cross, but we're not necessarily getting that separation. So we want to see a little bit more. Okay, it's starting to formulate. Okay, but it's still sloppy down below. Okay, here's that same 8-tick range chart. Down close, right? Also momentum trade. but you also have that red sloping line. Okay, nice slope to it with the separation. That is the actual close above the trend line. Okay, so that's what I would be looking for. Unfortunately, this isn't matching up. Okay, but you should see some movement here. Okay, so let's try the YM. Remember, we're on an 8-tick range chart. So again, our bracket option, when we left click the triangle here, the bottom of the DOM opens up. Buy stop and sell stop are checked off. When I right click over it, everything's factored in ticks. And that should read 16. Okay, so we're just waiting for an opportunity here. Okay, see if the ES offers us anything on that same 8-tick range. No, it does not. And I got things popping up all over the place. All right, so nothing really going on with the ES on that time frame. And here, thank gosh, the Russell is sideways. I'll never trade that, but okay. All right, let's look at our little natural gas trade on a 4-tick range. And as I would kind of expect, just kind of falling asleep. Okay. Here's a little curveball since we have a little bit of time here and we're waiting for things to formulate. Okay. I did this for Bruce Duffy. Bruce might be in here. See a little red arrow here? Okay. You know, in the morning, especially if you're CFRN members, Michael's doing the yellow arrows and he's highlighting the trades, right? Okay. One way to get rid of that, one way to not have to do that, is you can code it here where it'll actually put the arrows in when you get filled. I got to remember how I did this. Okay, so hold on. Yeah, so what you do is this. See this little properties box here? Right here, the double arrows? Left click on that, and chances are it'll probably pop up the current profile. You need to hit this little drop down button here and go to, if you're not on the natural gas, you might be on the S&P, but the idea is to get it on orders. Okay, it'll be down below. It'll be below the CFRN indicators. Left click on it. Go down to filters, orders and fills. See how I have the fills turned on and visible on? Just the fills and just visible turn on. Anytime you get into a trade that's completed, this arrow will pop up. If it's a bear, if we get short, it'll print a red arrow. If it's a green one, if it's a bullish setup, it'll print a green one for us. All right. So watch. Well, here, we'll let that thing formulate. So let's see if we can get involved with something else here. All right, so we'll monkey around with the crude with this, okay? So hold on. Don't push any buttons, okay? We're starting to gravitate toward the BBC, so we have to draw the trend line, right? This is a warning flag. It's red, so that suggests it's watering down the probabilities on this trade, right? Okay, that's a warning flag. In addition to that, a close above this trend line is also required, right? Do we have separation? Is that green line pulling away? It does. Okay, so it meets this requirement. So it's got a lot of good things going for it, okay, other than that's not good. But if it does happen, we'll get involved. Now here's what Michael does. If the low is 51.50, the high has to be 51.54. Every trade is plus 4 ticks in height, right? Every candle, okay? Is that going to be above the trend line? No, it's not. Okay, it's not going to qualify. The easiest way to do this, okay, if you add or subtract 5 instead of 4, but you add or subtract 5, that's the price you right click on. Okay. So if the low is 51.50, we would then right click. We would right click in the green at 51.55. Okay. Add or subtract 5. That's your magic number. Okay. So that fifth print or the fifth tick will activate a new candle. Okay, that's what you're doing. Okay, you can't do it at 51.54 because we can go back and forth, back and forth, back and forth, and fail. Right? If you go 51.55, it'll back and forth, 55. That candle closed higher. Right? So we're on that second candle. So that's why you want to add a fifth tick plus 5. All right. This is day 1. Don't even worry about it. If you're just learning it, if you're a new member, don't worry about it. Okay. You'll absorb that with some time. For you, what I would do is learn the setup. When the setup happens, go inside the DOM and left click. Just keep it simple. All right. All right. So this guy is doing nothing. All right. Let's go. I thought maybe this would fire. Let me look around. Don't follow me just yet. Okay, this finally broke out. So if the peso actually pulls back, I'd be interested in going along the Mexican peso. All right, we're kind of trading sideways. ES is doing the same thing. Okay, we're in this sideways action. So here, let's see if we can pull back. Second. There's the up close, right? I want to show you how this green arrow. Yeah, I got it on. See if it turns on. Of course, it's going to blast off because I'm trying to show you an example. All right, let me just cancel all. Hold on. All right, hold on. And that was the up close. It's a momentum trade. All right, let's find something else. Hold on. All right. I'm just doing this. I left clicked in the green in the Dow. See the green arrow? So my point was, after all that, I wanted to show you, if you left click in the green and you get long, it'll produce a green arrow. Okay. Now that's just not a trade setup. Okay. But I just wanted to show you that. And you notice below us, our stop is 16 ticks away because that's where we put it. Okay, we put it 16 ticks away, and the reason is we're on an 8-tick range chart. All right, so the idea was to put that in slow motion. Okay, so and watch me move the stop up. So watch this. I'm left clicking over the 1 and dragging it up. Okay, dragging it up. Okay, so that's what I'm doing. So in doing so, I'm in a way reducing my risk, right? So I'm just going to drag it up here for no other reason, just to show you how to do it. Okay, so hang with me. All right, so I just moved it to our entry right here. I'm going to move it +1. Why? Because this is our entry and our stop is here. All right, I closed it out. And I see it's got the red candle here. So when you're looking and evaluating and reviewing your trades, okay, it's going to look like this. You'll have a green and a red, green and a red. Okay. Like I said, I just did that just to show you green and red arrows, and something just happened here because we're going berserko. Okay. I hope that helps. Actually, that Bruce turned me on to that, and I said, you know what? I should advertise that because, that's better than sometimes doing this all day, and it doesn't take up a whole bunch of your charts. Okay. This is Bert. Hey, Paul. Call back, Paul. Call back, okay? Okay, so consider that, okay? That might be just, you don't have to do anything. The platform's doing it for you, okay? What's going on here, okay? See, when I left clicked, it put a red arrow in there. So you don't have to do any of those ellipses or stuff like that. Stop as a break even. Okay, now we're getting close to support, right? Support dot, so we're going to squeeze that sucker. All right, so we're flat. So there's the green dot. I don't know why it did it there. I don't know why this guy's popping up in front of me. But here, this is the other side of it. Maybe I have to fix this. All right. So I wanted to review what I just did there because things were moving fast. And so we had the bearish cross here. The market starts gravitating toward the BBC, right? And so you notice the first thing I did was I drew a trend line, right? And we got the down close, okay, with a red candle. And we had a red cycle. It had a good slope to it, right? We had that separation, okay? I noticed over here, this area here, there wasn't much going on over here, right? That told me maybe we were trending. But the question you might ask yourself is, well, dynamic support was printing. Wasn't that bothering you? No. As long as there's space between here and your support dots, that's fine. What gave me some confidence was this guy here, that it was red and it had a slope to it. So that gave me confidence that, you know what, I could probably advertise a good trade there. Okay. So again, I talked a lot about color and slope. Okay. Strongly consider that. Okay. In your trading. Okay. Especially when you're looking at the slingshot. Okay. All right. And then this little training tool here. Okay. This can eliminate a lot of those yellow arrows. Okay. So just something to think about. All right. So that wraps it up. We've been doing this for roughly about an hour here. You know, and I think we have something. Okay. Here's one we did here. It's backfiring. Exit at market and cancel. See, another green arrow lets you know where you got short, where you got long. Still, I just closed it out, but still, it looks good still. Looks like it can go forward. So the idea of this was, again, to give you an eyes wide open approach of what's going on. If you're new, this is a great syllabus for you to lean on, okay? We talked about trending markets. That should be number one on your list, and a solution to that, zoom out, zoom out, zoom out, okay? This red magnifying glass. The other thing we talked about is drawing trend lines. As soon as you get the cross, whether it's a bullish or bearish cross, you should be activating that trend line and drawing them, okay? By the end of the day, okay, your trend lines, your chart should be messy. And a quick way to get rid of all those trend lines with one push of a button, bottom left-hand corner of the chart here, when you select all, this little black X highlights, left click on it, it gets rid of everything. Okay, so that's that'll get rid of all your trend lines. Select all, hit the remove drawing objects, gets rid of everything. Okay, we talked about everything being the same color. Okay, that's ideal. We also talked about the slingshot and the cycle being having a 45-degree angle, having a slope to it. That's important to us, whether it's behind in our favor or against us, right? The same reason why we wouldn't get long or short if it was a different color and pointing up against us, hitting us at a 45-degree angle. Why would we do that? We just said we want a 45-degree angle at our back. Okay, so the same principle applies. Okay, so that's important. I think that's about it. Oh, this training tool with the arrows, I think that's a cool idea. I think it's a cool idea that you review your trades, whether they're good or bad, review them. And this actually will highlight them. So you don't have to do any extra work. If you're just crazy about the NASDAQ or the Russell, you know, right now the volatility is high and the 4-tick range, it might just be impossible to trade. One way to slow it down is go to an 8-tick range chart. Okay, it slows it down. The only difference is, as we said, your stop isn't 8 ticks, it's now 16 ticks. Same rules apply. Okay, bearish, bullish cross, pull back to the BBC, we draw the trend line, all that jazz. Okay, so that's the scoop. All right, I'll see you guys in the morning. I'm in the background every single day. You know, if something pops up, I might jump in there and point it out. If you have questions about the setup, the platform, downloading it, getting things set up, you know you have someone to call. That's comforting to call the phone and have me pick up, knowing that I know the platform and the setup. So if you raise your hand, I'll do it. I'm not going to call you every day and say, hey, what's up? What's up? You good? You good? You good? Just, I'm going to let you go at your own pace. Just let me know if you need help. Okay? Because this is about you doing it, not me, right? That's why you signed up to do this. I know some guys fall into the trap of trying to shadow Mike, right? Hey, I'm just going to follow right behind him. Nope, not going to work. Okay? You have to push your own buttons. Okay? So you have to build up your own confidence. Okay? And the way you do that is go through the reps. Like the things that I do with the girls with softball. It's all about reps. Okay? One way I build confidence in the girls is just keep hitting ground balls, ground balls, ground balls, ground balls. Okay? Until it just becomes second nature. That's the same thing you're doing here. Okay? You're just in front of the screen, gauging the marketplace, practicing. You have to push the buttons. Okay? That's another thing. Push buttons. Okay? That means if you see a setup, left click. Okay? Just have to do it. All right. That's it. It's been recorded. I'll get it out on YouTube. It should be out there tomorrow morning. Okay? See ya.